Hi guys, so today we are going to be studying Essay 210, which is agreeing the terms of audit engagements. A little background to this standard. Now, agreeing the terms of audit engagements, what does this mean? Before we are auditing any company, we need to agree on certain terms. That the audit will be carried on a certain premise. These will be the rules governing the audit. This will be the legal and regulatory framework that will be governing the audit. The financial statements will be prepared as per this particular framework. What will be the responsibilities of the management? What are the responsibilities of the auditor? Responsibilities of the management could include preparation and presentation of the FS, then the maintenance of appropriate and effective internal controls. The responsibilities of the auditor could be performing an audit in accordance with standards on auditing and issuing an audit report appropriate in the circumstances. So all these terms have to be agreed in advance before you begin an audit engagement, and that is why SA 210 is extremely important, because you are going to make a written agreement which will be signed between the auditor and the management, and it lays down the engagement terms. So tomorrow nobody can backtrack on sort of anything that is listed in the engagement agreement. They will both have to agree on whatever terms are laid out in the engagement letter, and that is why this standard is extremely important. Now let us go to the first answer. Objectives of the auditor as per SA 210. It's 210, sorry. It's not SA 10, it's SA 210. Number one, establishing whether the preconditions for an audit are present. So there are certain preconditions for an audit. What is precondition? The fact that you can do an audit, you should be the environment should be suitable for doing an audit. That would be preconditions for an audit. Preconditions for an audit is explained in the second answer, if you see just below the first question. So we will see that in detail. But what is the first question saying? The objective is establishing whether preconditions for an audit are present. So preconditions for an audit is an important factor that the auditor should determine are actually present. Point number two, confirming that there is a common understanding between the auditor and management or TCWG about the terms of the audit engagement. So what should he do? He should formulate the terms and confirm that there is a common understanding between the management and between him, that these are the agreed terms, and he will sign those engagement terms on an engagement letter. So there will be a written evidence that these are the terms between the management and the auditor that have been agreed upon. Also note that wherever management comes in this standard, it will always be management or those charged with governance as appropriate. So you can just remember that. Okay. So now the next question is preconditions for an audit. Now what are the preconditions for an audit? In order to determine whether preconditions for an audit are present, the auditor shall: point number one, determine whether the financial reporting framework to be applied in the preparation of FS is acceptable. So the FS will be prepared by the management. Now the management will use a particular financial reporting framework to prepare those FS. They will ensure compliance with the particular financial reporting framework while preparing the FS. And so the auditor should ensure that the financial reporting framework that the management will be using to comply with the financial statements is appropriate or not. Point number two, obtain the agreement of management that it acknowledges and understands its responsibility, A, for the preparation of FS in accordance with applicable FRF. So that is the management's responsibility, and it should be aware of this responsibility. Point number B, for internal control to enable preparation of FS which are free from material misstatements. Internal controls again is a responsibility of management. Third, to provide the auditor with subpoint 1, access to all information of which management is aware, such as records, documents, etc. Second, additional information that the auditor may request. So in the first point, the management will provide with all the information that they believe the auditor will require. Second point, if the auditor feels that in addition to what information management has provided, he feels that he needs certain other information, and he will request that the management should provide him with that additional information requested by him. Then subpoint 3 is unrestricted access to persons within the entity from whom auditor determines it necessary to obtain audit evidence. So if the auditor feels it is necessary for him to inquire of certain matters within, let's say an accounts officer or an accounts clerk, so the management cannot deprive him from doing so. It is well within his right, and he has to be provided with unrestricted access. That access cannot be controlled or restricted. He should be able to speak one to one to that person. That access should be unrestricted. Next question. Limitation on scope of the audit prior to acceptance of the audit engagement. So this is speaking of a situation where prior to accepting the audit engagement has not even been accepted, but already the management is imposing a certain limitation on the scope of the audit. Note that the audit engagement has not yet been accepted, but still the management is already imposing a scope limitation. So you have not yet started the audit, and if you have not yet started the audit, you will have a lot of options within your control. So what should you do if the auditor believes that such limitation will result in him disclaiming an opinion on the FS? Because of the scope limitation, you feel that you will not be able to obtain sufficient appropriate audit evidence which will lead to disclaiming an opinion. Then the auditor shall not accept the engagement unless required by law or regulation to do so. So what you should do is, if the management or the TCWG is already imposing a scope limitation even before you have accepted the audit, you should not accept the audit if you feel that it is going to lead you to disclaiming an opinion. Okay. Now the next answer, agreement on audit engagement terms. The auditor shall agree the terms of the audit engagement with management, or where appropriate those charged with governance. It shall be recorded in an audit engagement letter or other suitable form of written agreement, and shall include the following points. Note that we have to enter into an audit engagement letter or other suitable form which is a written agreement. It cannot be an oral agreement or some kind of tacit agreement. It has to be a written agreement. Okay, now what point should the engagement letter include? Point number 1, the objective and scope of the audit. The objective could be that we are going to issue an audit report, and we are going to audit the financial statements of the company. Scope could be what all financial statements are you going to audit. Point number 2, the responsibilities of the auditor. This would usually be that the auditor will audit in accordance with essays. Responsibilities of the management, like we saw above, providing information, providing additional information, providing unrestricted access. Fourth point, identification of applicable FRF. This could be companies' Indian accounting standards or the old accounting standards, or let us say if it's a tax audit. So, there can be different financial reporting framework that may be applicable. Point number 5, reference to the expected form and content of the reports to be issued by the auditor. So you may have an audit report, you may have a report on the adequacy of the internal financial controls. You could also have a reporting on the CARO 2016. For banks, you may have a long form audit report, that is a LAFAR, or so you can have various kinds of audit reports that you may be issuing, and you may refer to what audit reports you are going to issue in the engagement letter itself. Next question, very important. It is frequently asked in the exams. Should the auditor sign a new engagement letter for recurring audits? Now, recurring audits is what? When you are doing the same audit, when you are doing the same company's audit for multiple years, that is a recurring audit, right? So now for every year, should you enter into a new engagement letter? Not really necessary, because the terms, the management and you as well, you all are aware of the terms, and as such there is no need to enter into a new engagement letter every year. You can just enter into, let's say, one engagement letter for 5 years. That one engagement letter could encompass a period of 5 years itself, in order to sort of free yourself from the hassle of entering into a new engagement letter every year. But there are certain cases where it may become necessary to enter into a new engagement letter. Now let us read this answer to understand what are those cases. On recurring audits, the auditor shall determine whether terms of the audit need to be revised, or whether the entity needs to be reminded of existing terms. So there are two situations that are being mentioned here, whether terms need to be revised. So see, if terms need to be revised, then so you have to issue a new engagement letter. There is no way that the old engagement letter can serve as a reminder, or can serve the purpose of the revised terms. No way can the old engagement letter contain the revised terms. For revised terms, you will have to obviously enter into a new engagement letter. And the second situation is whether the entity needs to be reminded of existing terms. So let us say the existing terms ka engagement letter you have already signed. It has been signed by you and the management, but now the management is not complying with those terms. Maybe they're not providing you unrestricted access, or they are not giving you additional information as being requested by you. They are not complying with all these terms that they have signed. So now it may be necessary that you need to remind them of these existing terms, and therefore it may become imperative that you sort of of enter into a new engagement letter even though terms have not changed. So two situations: one is where terms are being revised, then you should enter into a new engagement letter, and second case is when the entity needs to be reminded of the existing terms. However, the following factors may make it appropriate to revise the terms of the audit or remind the entity of the existing terms. Now, there are 8 factors that we have mentioned here, that the standard on auditing is mentioning that you should enter into a new engagement letter if any of these 8 situations exist. This is not an exhaustive list. There can be more points, but these are 8 indicatory points. Point number 1, any indication that the entity misunderstands the objective and scope of the audit. So if you feel that there is a misunderstanding of the management, that they are not understanding the objective and scope of the audit properly, it may become imperative to enter into a new engagement letter. Point number 2, any revised or special terms of the audit engagement. In this case, if you are revising the terms, then you will have to enter into a new engagement letter. Point number 3, a recent change of senior management, CEO, CFO has left, or a new CEO, CFO has come into place, then it may be wise to kind of, again sign the engagement letter. Point number 4, a significant change in ownership, shareholding has changed. Point number 5, a significant change in the nature or size of the entity's business. The business has suddenly expanded a lot. The company was first a much smaller company, now it's a much bigger company, so you may just want to sort of re-sign the engagement letter. Point number 6, a change in the legal or regulatory requirements. Your legal and regulatory framework has changed. Point number 7, a change in the FRF adopted in preparation of FS. So first, maybe you are using accounting standards to prepare your financial statements, but now as per the Ind AS framework, Ind AS roadmap, it is compulsory for your company to adopt Indian accounting standards, Ind AS. So you may have to change the FRF that is applicable to the FS, and hence you may have to enter into a new engagement letter. Point number 8, a change in other reporting requirements. Like let's say now CARO 2016 is applicable at the moment, but from next year CARO 2020 will be applicable. So then you will have to revise the engagement letter because you will have to make it known that this new reporting requirement is there. Now, what is the next question? How should the auditor respond to a request for change in the terms of the audit engagement? So now the audit is actually proceeding, it is in course, but now suddenly the management is asking you for a change in the terms. So now what should the auditor do? Should he accept the change in the terms? Should he not accept the change in the terms? There will be certain criteria that has been set out by the SA that you should accept maybe in this case or you should not accept in this case. So what should the auditor do? Let us read and find out. Point number 1, the auditor should not agree to a change in the terms of the audit engagement when there is no reasonable justification for doing so. So what is the important word here? Reasonable justification. If the auditor feels there is a reasonable justification, he shall agree. If he does not feel there is a reasonable justification, then he shall not agree to a change in the terms. Point number 2, if prior to completing the audit, the auditor is requested for a change in the terms, he shall determine if there is a reasonable justification for doing so. Point number 3, if the terms of the audit engagement are changed, the auditor and management shall agree on the new terms and record them in an engagement letter or other suitable form of written agreement. So if the auditor feels that the new terms are reasonable and there is a reasonable justification for doing so, they shall enter into a revised engagement letter or any other suitable form of written agreement. Point number 4, if the auditor is unable to agree to a change in the terms and is not permitted by management to continue on the original terms, so the auditor is not agreeable also to the new terms that the management is proposing, and plus the management is not allowing him to continue on the basis of the old terms, then what should the auditor do? Point number A, withdraw from the audit where possible under applicable law or regulation. So he should resign from the audit. Point number B, whether there is any obligation to report these circumstances to other parties like those charged with governance, owners or regulators. So you may have to do a regulatory filing for reason of resignation with the stock exchanges where it is a listed company. So you have to determine whether there is any obligation to report to any regulators or owners or TCWG when you have withdrawn from the audit assignment. Now, next question, which factors determine the acceptability of the FRF? So we had seen that this acceptability of FRF in one of the answers. agreement on audit engagement terms, we may have identification of the applicable FRF, right? So now how should the auditor determine if the FRF is acceptable? FRF is financial reporting framework. First, the nature of the entity. For example, if it's a business enterprise, there may be a different kind of framework applicable, or if it's an NPO, not for profit organization, a different framework may be applicable. Point number two, the purpose of the FS. What is the purpose of the financial statement? Is it to meet the common information needs of wide range? Then we will prepare a general purpose financial statements. Or is it for specific users? Let us say for tax authorities. Then you may use a different framework to prepare the financial statements. Point number three is the nature of the financial statements. That is it a complete set of FS or a single FS? Do you need to, like, a complete set of FS could be like during a year end, but during an interim period, you may just prepare condensed set of financial statements. Point number four, whether law or regulation prescribes the applicable financial reporting framework. So all these are the different factors that you need to consider to determine the acceptability of the FRF. Okay, so the last answer is examples of form and content of engagement letter. So this is basically telling us what should you include in your engagement letter. The engagement letter is prepared by the auditor, and the auditor signs it, and also the management signs it, right? But what all points should he include in his engagement letter? Point number one, elaboration of the scope of the audit, making reference to applicable legislation, regulations, essays, and ethical pronouncements. So he can make a reference to the Companies Act, that audit is required as per Companies Act, and he can say that as the audit will be performed in accordance with the standards on auditings, and code of ethics will also the auditor will also have to comply with the code of ethics as per the Chartered Accountants Act 1949. So these all points auditor can include in his engagement letter. Point number two, requirement for the auditor to communicate CAM as per SA 701. So the auditor can include a point that he may have to communicate CAM as per SA 701. Now for listed entities, you will have to write you shall have to communicate CAM. For other companies, you may communicate CAM if you decide in the circumstances of the audit that it is necessary to communicate CAM, then you will communicate CAM. Point number three, the fact that due to inherent limitations of an audit, together with the inherent limitations of internal control, there is an unavoidable risk that some material misstatements may not be detected even though audit is planned and performed properly as per essays. So you can include this point in the engagement letter in order to nobody should come and question you tomorrow that a material misstatement was found, how did you not detect it? You will have to include this clause in your engagement letter that there are inherent limitations, and the auditor is not an expert, nor is he investigating the financial statements. So this point is very, very crucial. Point number four, the expectation that management will provide a written representation. This is as per SA 580. Point number five, the agreement of management that they will provide draft financial statements and other accompanying information in time to allow the auditor to complete the audit as per proposed timelines. Now, the auditor is always expected to issue the audit report by a proposed timeline by the management. In order to issue this deliverable in time, the management will also have to cooperate with the auditor by providing him the financial statements, that is the draft financial statements, and other information, other audit evidence in time. So this point also should be, set out in the engagement letter. Point number six, the basis on which the fees are computed. You should include your fee amount in the engagement letter. Point number seven, the fact that the audit may be subject to a peer review under the CA Act 1949. So we have peer reviews where one firm conducts the review of another firm's audit documentation. So you can just include this point that the documentation of this firm may be subject to a peer review under the CA Act 1949. So this is it about SA 210. I don't think it's a very difficult standard. It's quite a nice standard actually, and it is actually an important standard also from a basic standpoint, where the auditor has to just agree on the terms. It is a very important standard. And so this is it for today. Please do like, comment, and subscribe my channel. I know I keep saying this every time, but please do it. It's very important. And also please do follow my Telegram channel. All the notes of all the standards that I make videos on are published already on the Telegram channel. So that can be your one-stop source for, getting all the notes of my auditing and other subjects also. So the username is CA Newton Lobo. And that's it for today. Thank you for watching this video, and see you in my next video. Bye.